Hello everyone, thanks for joining us on this Saturday and welcome to this Specialist Trading educational presentation. Now today what I want to do is share with you the entry rules to one of our most consistent pullback strategies. In fact, by the end of today you'll know exactly how to implement these rules so that you can actually start using this method as early as next week if you'd like. Now the reason why we're focusing so much on pullback methods today and specifically a pullback strategy is because I would venture to say that the majority of all traders have at one time traded some type of pullback method, or they look to buy at lower prices. The only trouble is it's very difficult to discern when a pullback is in place or whether a new trend has begun in the opposite direction. For example, if we look at this chart right here, we see that, well, looking off these, this is an older chart of the SPYs, looking off these first 4 or 5 bars doesn't look like much. In fact, if you wanted to make a case for it, you could say this is some support right here. This is kind of a bottom we're making. But then this happens. So you say to yourself, okay, we've broken support, so I guess we're in a full-fledged downtrend right now. So I should stay away from this, and if I'm going to do anything, if I'm a more aggressive trader, then I guess I should short this. But with pullback trading, with the requirements and with the rules, once they are all met, rather than seeing that you may be in a downtrend, they may actually see that this is a buying opportunity. And if all the requirements fall into place, instead of saying that you're in a downtrend, with a pullback, you'll actually find out that this was a buy signal right here. So everyone else is selling, where everyone else is getting out of the pool, you're actually jumping in and able to buy at lower prices before the rally resumes its upward course. This is the essence of pullback trading, although it's very difficult to discern when a pullback has taken place or when we're in a full-fledged downtrend or opposite trend of what you're doing. Well, today, I'm going to share you once again the entry rules to this really consistent method so that you'll be able to figure out whether you're in a pullback or whether you're in a full-fledged downtrend. Now, I know a lot of you may be saying, well, Steve, I'm not a technician. I know most of the stuff you teach is technical analysis. You look at a lot of numbers. You look at the chart. You're always saying the chart is the source of everything. Well, it is. But we understand this, and we fully realize why most traders have difficulty. They don't really look at trading this way. So I teamed up with Pro Trader Strategies, and we developed the Pro Trader Strategies Primo chart platform. All right, this is the educational platform that makes pullback trading simple. Now, all the examples you're going to be seeing today, everything I'm going to be sharing with you and revealing these rules was generated by displaying our PTS Primo charting platform. So welcome once again. Thanks for taking time out of your Saturday. My name is Steven Primo. I am the president and founder of Specialist Trading. And if you're new to my webinars, we're a little bit different from the other webinars you may have attended. I know a lot of you, because of the recent action, downward action in the markets, are probably thinking, well, I'm going to come here today and he's going to tell me what he thinks the markets are going to do. Are we bottoming out, or are we going to be going lower? Or he's going to tell me what stocks to buy or which ones I should sell. Or he's going to say what the best time frame is. Well, if you've come here today thinking I'm going to say and talk about those things, you've come to the wrong place. In fact, it doesn't really matter if it's today or any other time when I give my free webinars. We never discuss those things. And believe me, it's our philosophy not to. The reason is, if you think of it, and I've said this many, many times, the entire trading industry is based upon you going to a website, going to a webinar, watching some pundits on TV, going to a chat room, finding out what someone else likes or doesn't like, finding out what they want to trade and how they want to trade, where to buy, where to sell, and then the student or the individual trader just blindly following along, trusting in them, hoping that it's all going to work out fine, okay? Well, if the entire industry is based on this, and if most traders trade this way, myself included when I first started trading, then why has it been estimated that 80 to 85% of all traders fail? It must be because this concept doesn't work. So if you think of it, what are you doing when you blindly follow someone? You're basically saying, I don't know what to do. I don't have enough experience. I don't have enough training. I'm not strong enough to trade these markets and make decisions on my own, so I'll let someone else decide for me. Basically, you're taking yourself out of the game. And this is why most traders fail. What we do at Specialist Trading and Pro Trader Strategies is we fill that void. We provide you with sound fundamental education that has stood the test of time, so that you can make your own decisions. Now, we just don't, share this with you and say good luck. We mentor you along the way. We correspond with you. We share with you different strategies and techniques that have worked and work with you so that you can decide for yourself what works best for you according to your own means and what really makes you feel comfortable. Now, I've been trading for 43 years now, and this is the way I was taught. When I first started trading, I struggled tremendously. I was doing all the same things probably most of you are doing. I was waiting for the earnings reports to come out, waiting for the jobless claims. I mean, a lot of people emailed me yesterday and said, Steve, do you have any idea what these numbers are going to be or what they're based on? And I said, I have no idea. In fact, I stopped looking at that stuff 40 years ago. So why would you ask me that? I don't even concentrate on that. So you can follow those things if you want to, but trust me, if you've been following those things, ask yourself, how well are they working for you? How is your trading going? Are you getting the type of results you want? Mainly it's because if you're not, you're taking yourself out of the game. This is our purpose. We want to educate you. As we said in the opening statements, we are first and foremost an educational company with our only goal being to educate you as traders. And you'll see the attention to detail we give in today's presentation where I really want to teach you the entry rules to this particular method. Now, before we begin today, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results with the entry rules of this particular method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples, since we are an educational company, all examples are strictly for educational purposes only. Now, if you'd like to get some more education on a daily basis, feel free to follow us on Twitter. There's our handle right there if you want to copy that down. Every day I post different educational information, anywhere from signals that our strategies have generated to little bits of financial wisdom, little bits of education on some of our concepts, philosophies, and techniques. Lots of great free education, so please feel free to follow us on Twitter. Now remember, once again, we are a little bit different from other webinars in the fact that we're only trying to educate you. We're not going to tell you what the market's going to do next week. In fact, we have no idea. I'm not going to tell you what to buy or what to sell. I'm not going to tell you what the perfect stock is or what the perfect market is. We don't believe in that. We believe that would be doing you a disservice because that would most likely be contributing to your failure. And we know that most traders fail because they're taking themselves out of the game. Our goal is different. Our goal is not to trade for you because a good mentor does not trade for you. He teaches you how to trade. So my goal, along with Pro Trader Strategies, is simply to teach you how to trade with the specialist edge. Now, when I was struggling some 43 years ago when I started my career on the floor of the Pacific Stock Exchange, I was doing, like I said before, many of the same things probably you are doing to this day and not getting the type of results I had been promised. I was listening to all the news, waiting for all the earnings reports to come out. I was making markets in about 50 or 60 stocks, so I was tracking all the earnings reports on all those stocks. I was waiting for the jobless claims. I was listening to all the so-called gurus and pundits on TV. We didn't have trading rooms or chat rooms then, but we had newsletters, so I was subscribing to all of them, and nothing was working. So why would you think if it didn't work 4 decades ago, it's going to miraculously start working now? I was lucky enough to have some mentors that were able to turn my trading around by teaching me all these concepts and things that I teach my own students around the world in over 115 countries and in every state in the United States. So hopefully I can turn your trading around just so that, you don't just have a good month or 2 months or maybe a good year, but possibly you have a good decade, maybe 2 or 3 good decades. That's my goal, to teach you how to trade with the specialist edge. The same edge that sustained me for 43 years now. Hopefully it can do the same for you. Excuse me. Now, since this is going to be run like a class, I want you to ask me as many questions as possible. I know you'll probably see something that won't make sense or maybe a little bit difficult to understand. So please wait till the very end to ask questions, though. If we stop at every slide the way some other presenters do, we'll be here far too long on your Saturday morning. I know you have a good holiday weekend coming up, so I want you to start it off on a fresh start. So I don't want you to be in a class all Saturday. So to keep this presentation to a minimum length, please wait till the end of class to ask any questions. I promise I'll get to each and every one of them. Now, the only question I will answer is the most common one, and that is, Steve, do you record these presentations? Yes, I do. So each and every one of you will be sent a link to this recording at the end of the presentation, okay? So if you're having technical issues or if you have to leave early, don't worry, you'll all receive a link. But we have a good class here, a good crowd on a Saturday morning. So once again, if you joined us late, please wait till the end of class to ask any questions. All right, with that said, let's jump right into it. Let's begin today's educational presentation, and we're going to share with you the buy signals to one of our most consistent pullback strategies. This is rule number 1 to this particular method. What you want to do is apply the 21 period Donchian channels. And you want to see that all three Dodging channels are headed in the same upward direction. Now, if you've never worked with or traded with Dodging channels, here's what they would look like. First of all, if we look at this generic chart here, most traders would say, well, I think we're in a full-fledged downtrend. This is where you got to stay out of the market. Whoops, got to stay out of the market. You have to just say, you know, I'm not going to buy anything. But once we add the 21 period Dodging channels, here you go, we see that we have three different lines here, okay? Top, middle, and bottom. So what you want to see is you want to have these set to a 21 period. Most of the time they're set to either a 20 or a 21 period, but you want to make sure that they're set to a 21, and you want to see that they're all headed in the same upward kind of stair-step direction. Now, you notice I said same upward stair-step direction. I didn't say in sync, because as you can see, they're not in sync at all. In other words, you know, here we may be going smoothly up, and here we may be going up and then sideways. Here we may be only going sideways, then up once, then sideways. But as you can see, they're all headed in the same upward direction. Now, sometimes you'll see a prolonged period where it's just going sideways, and someone will say, well, Steve, I don't know what direction that is. The best way to determine that is to see what the previous setting was. So in other words, if you have prolonged sideways action, it was previously set lower. So that means you've been coming from a lower setting. That means you're going up. So that's the way to determine which direction you're going in. So you want to see that you're headed in the same upward direction, okay? Just like this. All right, rule number 2. Now the rising price bar now begins to sell off. Wait for a bar that is entirely below and not touching the rising midline channel. This is called your setup bar, okay? So if we look at the chart again, we see that as we're in an uptrend, price is rising. Many times when it's rising, it will touch the top Dodging channel. But then, as soon as it rises, it begins to sell off, all right? This is the pullback. As long as these Dodgings are still headed in an either sideways or upward direction, you are in an overall uptrend, all right? So this is not the beginning of a downtrend. This is a pullback. So as price bars start to sell off, they will touch and intersect this median line, but we're looking for a bar that is entirely below. Do you see how this bar isn't even touching? It's below. The top of the candle is below. This is called our setup bar. Now, a setup bar doesn't mean, okay, well, Steve, do I buy right here? No, it's setting up for a buy. But you must first be able to identify that setup bar, and this is how you do it, okay? All right, let's go to rule number 3. What we're going to do once we've identified the setup bar is we're going to enter a long position on the first confirmation of price trading above the previous bar or the setup bar's high. So for example, here's the setup bar. We're not going to just buy at the market because for all we know, we could buy and it goes straight down the next day. We need it to next day to trade here. Now, as you notice, I didn't say it needs to close there. It just needs to trade above that setup bar's high. Now, it could trade 1 tick above, 5 ticks above, 1 pip above. It's entirely up to you. But it just needs to trade intra-bar above there. That is your entry area. Now, if you notice, the very next day, it not only traded there, it opened higher. So it's your decision whether you want to buy it there or not once you see it opens there. But that would have been a wise choice here because we opened and closed much, much higher. Now, you could make the decision whether you want to exit at the end of that day, you've got a nice profit, or if you held on a little longer, you've got even better profit, okay? So what we've shared with you right now are the entry rules. I know a lot of you are saying, boy, this is great, but Steve, where would I exit this? Where would I place my stop? Well, those are all part of the course. I can't give you all that information right now. That wouldn't be fair to the people that have purchased this course, but I just shared with you the entry rules. If you have a nice profit, you can exit wherever you'd like and, you know, take a profit and get out, okay? Now let's look at the opposite side of the coin. Let's look at sell signals. They're basically the same thing. We're just going to reverse them. Rule number 1, obviously, we're going to apply the 21 period Dodging channels, and we want to see that all 3 of these channels are headed in the same downward direction. You notice I didn't say we want to see that all 3 are in sync. They're just headed in the same downward direction. Okay, this will tell us that we are in a downtrend. So as we go lower, or as we see the next slide here, we see that most traders will say, well, Steve, this is the definition of an uptrend. We have higher highs, higher lows, and, you know, why would I want to sell this? Well, the first thing we do is we apply the Dodging channels, all right? You may think that this is an uptrend, but once you apply the Dodging channels, the 21 period, you see which direction are they all going. They're all headed in the same downward direction. All right. Now I know this one, it's hard to tell because it's just a sideways action, but the chart, we didn't want to make it that long. If you notice, if we extended this chart, the last setting was higher. So it would be coming from a higher setting. So they're all headed in the same downward direction and they continue to go lower. Okay. So if they're all headed in the same downward direction, this is in no way the beginning of an uptrend. This is simply a pullback in an overall downtrend. You see how simple it is to check out and to find which type of trend you're really in? So what we want to do is see that this continues to go higher. Now this takes us to rule number 2. Now the declining price bar will now begin to rise, all right? This is called the pullback. Wait for a bar that is entirely above and not touching the declining midline channel. This will be labeled the setup bar. Okay, so what we want to do is when we see price declining here, usually it'll touch the bottom line, the bottom channel, but then it starts to rally. Once again, this is not the beginning of some new uptrend where this is where most people fail. They say, hey, I went to that chat room and that guy said this has made a nice bottom here. This is where the institutions are buying. And also, that was great Fibonacci support. So I've got to buy too. I'll buy right here. And for a couple of days, you feel real good about yourself that you've made a nice little profit. But if you really listen to the market instead of listening to some guy in a chat room, you would know that this is not an uptrend. This is the beginning of a pullback. And so what you want to do is wait for price to touch or trade entirely above. You see how it's not touching this middle Donchian channel? This is the pullback, and as we rise, we locate and identify the setup bar. That is the first bar that is entirely above that midline. Now remember, the midline has to be going either sideways from a higher setting or lower. If this midline or any one of these lines started to go up, the entire setup would be negated. But as long as they're all in sync, as long as they're all in the same direction, not in sync, but the same direction, all the requirements are still in place, this is a valid setup bar. So this brings us to rule number 3. We're going to enter a sell position on the first confirmation of price trading below, not closing below, just trading, intrabar trading below the previous bar's low or the setup bar's low. So as we can see here, this is our setup bar. We want to sell if we trade right here. We do not have to close there. It can trade 1 tick below, 5 ticks. It's entirely your choice. Remember, you're in charge of your trading, not us. We're just sharing with you high probability setups. Ultimately, you've got to decide how you trade. Some of our students say, Steve, the minute it trades 1 tick below, I'm in, I sell. Some other students say, you know what, Steve, I want to give myself a little more leeway. I like to, I'm a longer term trader. I like to wait for maybe 5, maybe a full point or so below. That's fine. There's no one right or wrong way. These are not systems. You have to make your own trading decisions. So as we can see, the very next bar did trade below there, so you're short now. And once again, a lot of students say, well, Steve, do I have to short the stock? Can I buy puts or can I buy some kind of a spread with a downward bias? Yes, you can buy whatever you want or sell whatever you want. It's up to you. Remember, we're not telling you how to trade. We are just teaching you these high probability setups. The entire industry is based upon some guy in a room telling you what to buy or what to sell. You have to purchase options. You have to purchase a certain spread. You have to sell short the stock. We don't believe in that. We're just sharing with you high probability setups. How you want to trade it, where you want to enter, where you want to exit, where you want to place your stop is entirely up to you. We just provide you with that information, but it's up to you to decide which variable you want to take. All right, so let's say you entered here, regardless of how you chose to enter. Well, look what happened. You have a nice little trade there. What happened to the Fibonacci support right here? What happened to all the institutions buying? What happened to the brand new uptrend that was supposed to have started? Remember, this is why traders fail. You're relying on inconsistent methods and you're listening to someone or something outside of yourself. Once you have the education and the means to make your own qualified decision, that's when you'll start to become a consistent trader. This is our goal, not to trade for you, but to teach you how to trade. All right, so what you've just learned now are the preliminary entry rules to strategy number 1. This is one of our most consistent methods. Now, when we first started promoting and teaching this strategy years ago, it was mainly meant for stocks because I come from a stock background, and that's where I learned it, trading stocks on the floor of the Pacific Stock Exchange. But now, since we've been doing this for over a decade now, teaching a lot of students around the world, we found out that this can be applied to any market and any time frame, okay? So if you're a currency pair trader, you like to trade 10, 15, maybe 4-hour charts, you can apply this method. If you're a Bitcoin trader, you can apply strategy number 1. If you like to trade weekly bars of stocks, you can apply strategy 1. It makes absolutely no difference. Now, we're going to have a propensity to share with you a lot of stocks in today's presentation, but we'll also show you some other markets that this can be applied to as well. All right, so let's look at some highlights of this particular method. Remember, it's a pullback strategy designed to buy low in overall uptrends, designed to sell high in overall downtrends. The way it determines what the real trend is not by listening to some guy in a chat room and not by listening to what I think. No, it's by listening to the market with a unique Dodging channel application. Remember, this can be applied to any market, any time frame, any direction. But as with all of our methods, please, I know a lot of you are going to say, wow, this is great. I'm going to start trading this Monday morning. Please, I would suggest you do not do that. Why? Because most likely you'll lose money. I'm sure you're saying, well, wait a minute. I thought this was a really consistent method. How am I going to lose money? Well, most likely you'll jump in too quickly. You won't apply the rules properly. You won't have the correct settings, or maybe you don't even have the Dodging channel, so you'll use something else, okay? Or maybe you won't have the countdown perfectly. Maybe you'll look and say, hey, I'll just buy right now. I don't need it for it to go all the way below the middle line. So please, paper trade and see how this works for you. See if it fits in with your style of trading. Trade it with your particular time frame. Experiment with a number of time frames, a number of different markets to see which works best for you, okay? Our edge at Specialist Trading is consistency. I know a lot of you are thinking, well, Steve says this is the most consistent pullback method, so that means it works all the time. No, that's not what consistency means. Consistency really means there is an awareness that you will have losses from time to time. That's okay. In fact, I'm going to share with you a couple of losing trades here. A consistent method, though, is one that's able to recoup those losses, oftentimes on the very next setup. So that's what you're looking for, a consistent method that's able to recoup those losses. You don't want some method that promises the world, and sure, maybe has a couple of great home runs, and so you buy some $10,000 method, and then sure, maybe you have one great trade where you say, wow, I'm going to be able to retire in about 6 months. But then the rest of the year, you just rack up a series of losses. That's not consistency. What we're looking for is a 2-step forward, 1-step back approach, okay? The 1-step back meaning you will have some losses from time to time, but your ability and be able to recoup those is what you're looking for. That's what consistency is. And strategy number 1 is a very consistent method. All right, so let's look at some recent strategy number 1 examples, all right? We'll start off with stocks for all you stock traders out there. All right, here's an example in BBBY. All right, we have the Dodging channels applied. All right, this is on our platform, by the way, as well. All the Dodgings are pre-formatted, so there's nothing you have to do. All you have to do is click on strategy number 1 right here in the strategy 1 tab. The drop-down menu will appear. Just click on indicator, and you'll see the Dodging channels will appear, pre-formatted, just like this for you. All right, as you see, as price was going higher, it was hugging the top line. Now it started to sell off. As it sold off, now it gapped below the middle line. And as it's below that, the top of this is not touching. So this is where you want to buy, 1 tick above on the very next bar. And guess what? It didn't trade there. So most students, if they don't study these rules correctly, will say, well, okay, I'll look for another setup. But remember, as long as the Dodgings are still headed in the same upward direction, you don't have to negate this trade because now the setup bar is down here. And so you just move your entry point down to 1 tick above here. You see how this works? That's what's called tracking the trade. So you're just tracking it down as long as the requirements are in place. Now, if one of these Dodging channels had gone up like this, maybe this had gone up like that, well, then that's no longer valid. Remember, they all have to be in the same upward direction. So they're still in the same upward direction, even though they've been going sideways for a while. This one's been going sideways, but where was the last setting? It was lower. So that means it's still headed upward. Okay? So now we're going to buy 1 tick above here. Did it trade above the next bar? No, it did not. But as we look at the very next bar, we see that it's lower, but we're still headed in an upward direction. So now we can lower this entry down to here. And guess what? That's where we finally bought. So for all intents and purposes, we were originally going to buy here. Look, we got a better price. So now we purchase it down here. Here's our valid buy setup bar. And We would have made 5 points if we held on to it for a month. Now, I know a lot of you are saying 5 points, that's not a lot, but remember, that's 60%. The stock gained 60% of its price value in 1 month. Imagine if Tesla, Amazon gained 60% of its price value. So it's all relative. You could have purchased a number of shares more than you could have Tesla in this one stock. Here's another example in WMT, Walmart. All right, same thing. Even though this bottom line is really going sideways for a long time, look at the last setting. It was lower. So they're all coming from a lower setting. So for all intents and purposes, all the lines are headed upward. All right, so we see here a sell-off. Now, here's our very first setup bar. We could have entered right here. Now, depending on where you would have placed your stop, let's say you placed your stop right below that first bar. Well, you most likely would have been stopped out. And you would have said, well, this is not working. Steve said this was a consistent method. Well, listen, look what happened on the very next setup. You have to be, very diligent and continue to watch, because even though you got stopped out here, this was still a setup bar. So you could have continued to track this and purchased on this setup bar and potentially captured 17 points. Now, maybe you lost maybe 3 to 5 points here, but you could have recouped that and made some more had you stayed in an extra 5 days. Here's an example in CME. All right, all the lines are headed lower, even though you can't see this one going back further enough. It's coming from a higher setting. So price starts to rally. It intersects the midline. And now here's our first bar that is not touching the midline. It's entirely below. So what we want to do is sell on the very next bar that traded there. Remember, it's not where it closes. All it does is have to sell there for the standard format. And there's a quick 7 points in about 4 or 5 days. Here's another example in letter V. Okay, all the Donchians are headed higher. Price starts to hug the top line, then starts to sell off. You notice here that it touched the midline, but then bounced. We never went below it. Then it starts to sell off again. Now here's our first bar below the midline. It doesn't trade above there, so we carry it down to the next one. As long as we're still in the upward direction, we can carry it down and track it, and that's where we got in. We got in the beginning of August, 23 points coming into September. How about Microsoft? Okay, same thing. All the Donchians are headed higher. Price hugs the top line, starts to sell off, bounces again, starts to sell off. But if you notice here, a lot of people say, well, Steve, isn't this a setup? Well, it's actually touching that midline. Remember, we have to be entirely below. So there's no setup bar yet. It starts to bounce, then starts to sell off again. And now here's our first bar entirely below all of the rising channels. So you would have entered on the very next, this was at the very end of July. And the entire month of August, you could have potentially captured 28 points. And remember, we're saying potentially because the exit is up to you. Some of our students, I know myself included, had I taken this trade, I most likely would have exited on this nice day here where you touch the top Donchian channel. And maybe gotten in or looked to get back in here again, even though it didn't generate another signal, at least look to see if it would have. But at least I would have been out taking a profit. Where other students say, well, Steve, I'm going to use one of your longer term exit points and go for the more bang for my buck. And you could have potentially captured 28. Remember, our goal is to furnish you with all this information, different exit points, different entry points, so that you can decide for yourself. In my 43 years of trading, that's the only way I've found how traders can become consistent, not by blindly following someone or something else. Here's an example in FSLY. All Donchians are headed higher. We're hugging the top line, then we start to sell off. As we sell off, we touch and intersect. We still haven't gotten completely below until this one, all right? All right, so here's our first bar completely below the rising midline. We would have entered on the next one. Let's say we placed our stop somewhere around right here, okay? Well, what happens? 2 days later, we get stopped out. Most likely we would have lost about a good 5 to 8 points. Now, most people would say, if this was your first trade, they go, Steve, this doesn't work. You said this was very consistent. Remember, consistency means an awareness that you will have losses, but a consistent method is one that's able to recoup those losses. So let's say you got stopped out. Well, remember, you have to be diligent because look what's happening. All of the Donchians are still headed higher. And even though you got stopped out, let's say maybe on this bar or this one, by the time this bar closed, it's an actual setup bar because it's still below the rising Donchian. So you could buy one tick above here. Remember, you have to be able to get back on your horse. You get to get back in because the market maybe just be having a lot of fits and starts before it actually starts to go in your desired direction. So even though it got stopped out, you start over again and place another order. You would have entered the very next day here again, placed a new stop, maybe somewhere down here, and in the next week or so, potentially captured 36 points. So don't you think you would have been able to recoup that 8-point loss and then potentially made over 25, 28 points? Potentially could have done that, all right? Now, let's say you just wanted to make the 8 points you lost. You could have done that too. It's your choice. Here's an example in when all Donchians are headed lower, coming from a higher posting. As we start to rally, we're getting close to that midline, but we haven't achieved it yet. Now we start to intersect it, but we pull back. Now we start to intersect it again. Here's our first setup bar, entirely above the descending Donchian. So we would have gone short right here, 14 points in a little over a week. This was in July coming into August. Here's another example. This was in Apple coming into August. All right. We're starting to go higher. Now we start to sell off. Here's our setup bar completely below the mid-Donchian channel. You could have purchased at the very end of July here and potentially captured 40 points to the upside coming into September. Now, Facebook had another really nice setting. This one's a little bit different. Most people would say, well, if you don't have the Donchians, this stock is just kind of going sideways to lower. Why would I want to buy this? Well, the Donchians are telling you the overall trend is up since they're all rising. Here's your first bar that is entirely below. You could have purchased it right here at the end of July, potentially capturing 72 points to the upside. CRM gave two signals right here. This was in the middle of August. Now, if you had a really tight stop here, maybe you wouldn't have bought this or maybe got stopped out. It's up to you. But you had two choices to get in here in CRM, 82 potential points in a little over a week. Now, we know the stock gapped up based on something, but remember, fundamental news is not required. I can't think of a better way to lose money than to rely on fundamental news. Remember, I used to rely on fundamental news some 4 decades ago, and it couldn't make me a dime. My mentor said, Steve, listen, if you're investing, if you're holding on for the long term, you need to know fundamental news. You need to know about the inner workings of the company, which direction it's going, about the CEO, about economic reports, earnings, a jobless claim. You need to know all that information. If you're holding something for 2 weeks to a couple of months, it makes absolutely no difference. It's all in the price. The price tells you everything you need to know. That was a really difficult concept for me to grasp. But once I let go of it and I started to just rely on the chart in front of me, then my trading just started to become more consistent. So this is what we teach our students. Listen, if you want to hold on to all these old, outdated, conventional wisdom concepts that really don't show levels of consistency, it's up to you. You're more than welcome. Remember, our goal is not to tell you how not to trade. Our goal is just to teach you things that are very consistent. So if you want to trade with, based on fundamental news, that's entirely up to you. But it is in no way required at specialist trading. So obviously, there's some reason why CRM went up here at the end of August. We have no idea. And someone would say, well, how did you know to buy it? Well, because the market was telling us. All we had to do was apply these simple entry rules, and you could have gotten in well in advance of that nice jump. Now, as we look here in FE, we see that the Donchians are headed lower, so that's all we need to know. We're in a downtrend. As price hugs the lower Donchian, it starts to rally. It intersects this median line, and then we have our first bar above it, entirely below the downtrending median line. That's our setup bar. If we trade below there, we'll go short. Well, we didn't trade below there, but the next one is our setup bar. All the Donchians are still headed lower, so this is our setup. And then we move it up to this one until ultimately we move it up to this one, and that's where we got short. Now remember, if one of these bars, these Donchian channels went upward, the whole setup would be negated. But as long as they're going in the same downward direction, even though they're going sideways, they came from a higher setting. These are valid setup bars. So you could have gotten short FE here at the end of July and coming into August. Look at that nice 18-point slide in about a week. All right. Once again, we have no idea how low something will go. We don't predict anything. We just try to teach you what the market wants to do, and then we jump on board. That's how simple trading can be. There's actually no reason why you should try to predict what something's going to do. What we do at specialist trading, we just listen to the market. The market tells us what it wants to do, so we just jump on board. It's as simple as that. Lastly, let's look at the letter W right here. All the Donchians, once we apply them, are headed in the same upward direction. Here's our setup bar right here, the bar below. We enter on the very next bar in June. Had we decided to use one of our long-term exits, we could have potentially captured 190 points coming into the end of August, okay? So we've looked at stocks. Let's look at different markets in different time frames because we know not everyone just trades stocks. Let's look at an older chart of gold. That's a GLD. That's the ETF that represents the gold market, the gold index, okay? Just because we're looking at the ETF now doesn't mean we change anything. We still apply the 21-period Donchian. We see that they're all headed in the same upward direction. Price hugs the top bar, starts to sell off. Here's our first setup bar. We don't trade above there, but we can track it down because all the rules and requirements are still in place. So we would have entered right here in February before this really nice 12-point gain in the ETF, which represented thousands of dollars in gold rising. Here's another older chart of the ETF in oil. This is the oil index, okay? This is USO. Same thing applies here, but to the downside. When oil was falling out of bed in March and April, the same concept applies because price is hugging the lower Donchian channel. It starts to head up. Here's our first bar above. There's our sell setup. Potentially could have captured 70 points. Or you could have just gotten a good idea what oil is going to do. If you like to track oil and maybe you like to trade other stocks in the oil index, well, guess what? This could have told you if we're getting the sell signal in the oil ETF, don't you think that those stocks related to oil are going to go down as well? Now, if you like to trade the E-mini futures, okay, here's a 5-minute chart of the E-minis. This is going back to this last week. I believe it was Tuesday. We applied the Donchian channels. They're all headed upwards. All right, they start to sell off, intersect the median line, and here's our first setup below. You could have purchased here mid-morning of September 1st, I believe Tuesday, and potentially coming into the next day, if you wanted to hold it overnight, you could have potentially captured 20 points. That's $1,000 per contract, okay? If you had 10 contracts, that's $10,000 in one day. It's up to you. Lastly, here's a 4-hour chart of the Canadian dollar at the end of August coming into September. Now, here's what we mean by consistency. Once again, here was our first setup to go short. Now, if you wanted to take a quick profit, you could have taken somewhere once you came down to these levels here, gotten out. But if you stayed in, perhaps if you had a really tight stop somewhere around here, you may have gotten stopped out, okay? But look what happened. We got a second choice to get back in. You could have recouped all of that loss and potentially made, maybe 150 pips, including that loss that you took in. So this, once again, is what we mean by consistency. It doesn't mean that every trade is going to be a winner. It just means that you have to stay diligent because many times the very next setup will be able to recoup those losses. Okay, so let's recap before we go into the question and answer portion. Strategy number 1 is a very consistent pullback strategy, probably our most consistent pullback method. It trades stocks, E-mini futures, forex, ETFs, even trades Bitcoin and commodities. You must apply the 21-period Donchian channels. I know a lot of you would say, Steve, I don't have those on my platform. Well, if you do a Google search, I know there's some free sites that are able to provide that for you. Or if you don't have it on your platform, I would contact your tech support. They should be able to supply it for you. Remember, even though we first started out promoting this strictly for stocks, we have found out over the years through our students, they say, Steve, this works on any market, any time frame, in any direction. I just showed you a 5-minute chart of the E-mini. A 4-hour chart of the Canadian dollar, all right? Works on weekly bars of stocks, currency pairs, as well as Bitcoin, as well as commodities, okay? But please learn this strategy first, what I taught you. Watch this video again and paper trade. You must understand the concept like the back of your hand before you apply real funds. Our edge, as with all of our methods at specialist trading, is consistency. So we want you to know that there will be losses, but a consistent method is one that's able to recoup those losses sooner than later. So ask yourself, as we head into the close here, do you think this strategy can help your trading for the remainder of 2020? I always state as we get towards the end of the year, okay, are you anywhere near where you promised yourself you wanted to be come this time at the beginning of the year? Remember at the beginning of the year, everyone makes all these goals and promises, how they want to be trading, making so much a month, doing so well? Are you getting the type of results you promised yourself in January? Most likely you're not. That's okay. The majority of traders don't ever achieve those goals. Take your trading to the next level. Become a student of mine, become a student of the Strategy Number 1 course, and finish out 2020 strong. All right, we have a great Saturday discount for all the people attending today. We're going to offer you our Strategy Number 1 course, all right? Remember, it says stocks here because when we first started promoting it, that's all we were focusing on. But you can apply it to any market and any time frame. You're going to get all the entries, all the exits, all the stops. So you'll get the complete course rules. It also comes with an aggressive version for more aggressive traders as well as a conservative version. You'll get the complete Dodging channel settings, all right? And you can apply this, once again, to any market or time frame. Now, Strategy Number 1, for the students who've already purchased our course, they've spent close to $700 for this. But we have a great discount today. We're not going to charge you that at all. In fact, we're going to boost it again. We're going to throw in another strategy in this great promotional offer. We're going to give you Strategy 3A. Now, once again, when we first started promoting this course, it was strictly for intraday E-mini traders. But our students have told us that just like Strategy 1, you can apply this to any market, any time frame, any direction. So don't be fooled where it says Strategy E-mini Strategy 3A. This is our premier continuation method. It does this by using a unique Bollinger Band setting. Now, continuation method, if you're not familiar, is the exact opposite of a pullback. Today, we talked about a pullback method, Strategy Number 1. The E-mini, or I should say the Strategy 3A method, is entirely different. It looks for a strong trend already to take place, and then we jump on board because sometimes these trends are so strong, I'm sure you've seen these before, they don't even stop for a pullback. So you want to jump in when there's no pullback in place. For example, here's an example in TRIP, all right, with this unique Bollinger Band setting where one would have said, well, Steve, we've been going up for some time now. I'm not going to buy this. Strategy 3A generated a buy signal because it has the unique ability to see whether there's more room left in the movement. And as you can see, there was a nice move still left in this stock to the upside. It worked to the downside as well. Here's one in an older chart in WIN where most traders would say, well, Steve, I can't sell this. It's already fallen out of bed. It's probably going to bounce. I'd like to get in on the pullback. Well, sometimes there are no pullbacks. So this is where 3A comes in perfectly because it determines whether it's going to continue going down. That's what its function is. And as you can see, if you had waited for a pullback, you would have missed a nice short in this trade. So Strategy 3A is another great strategy. We're going to throw this in as well. This usually runs $700. We're going to discount this tremendously for it. But we're not stopping there for today's Saturday discount. We're also going to throw in some extra bonuses. In fact, a total of 7 Saturday morning bonuses. Bonus number 1, you're going to get the add-ons. That's the add-on for your platform where you can get the up and down signal arrows for Strategy 1 and 3A. So if you have TradeStation, Metastock, MT4, Sierra Charts, Ninja Traders, you'll be able to get the up and down arrows to tell you when a signal has been generated. That's a nearly $1,900 value, okay? We're also throwing in bonus number 2, our full Secrets of a Stock Specialist course. This is a 3-hour video seminar I recorded some years ago. I was the head speaker at a seminar in Denver, Colorado, and we recorded the 3-hour session with a lot more edges, a lot more techniques. This is a nearly $1,000 value. We're throwing this in as well, this video seminar. Bonus number 3, we're throwing in the PDF version of my book. Now, in my book, I talk about a detailed account of my trading during the crash of 1987. I was actually on the floor of the Pacific Stock Exchange making markets during the crash of 87. And you think that, March of this last year was crazy. Well, this was a lot more crazy than that. So I go into detail exactly how I traded. You'll be able to find that out in our PDF version. Bonus number 4, 6 months of our PTS Primo charts. Now, I'm going to come back to this because it's really worth its weight in gold. Let's go on to bonus number 5. Secrets 2.0 course. This is where we take more edges, more trading techniques to a higher level for the more advanced trader. This is a nearly $1,000 offer. Bonus number 6, you'll get the scanners on the platform to identify strategy setups, individual strategy setups. And bonus number 7, you'll get our multi-chart scanner. So you'll be able to scan for multiple strategies at once. Okay, Strategy 1, Strategy 3, and a number of different techniques all at once. All right, so let's go back to my favorite bonus here. This is bonus number 4, 6 months of our platform, because this by itself is worth its weight in gold with this special offer. The PTS Primo charts was designed to teach traders how to trade. Let me share with you what's included in this, okay? You're obviously going to get strategy number 1, strategy number 3A. Remember, everything is one click away. You'll be able to see and have all the indicators automatically plotted for you. We're going to have our enhanced buy-sell line. That gives you the overall trend, okay? Over 90 of the most prominent technical indicators. Personalized tech support. But let's go over these two highlighted features, the strategy signal scanner and our auto-generated exit levels. These are two extremely valuable tools that you'll only find on our platform. For example, here's what you do on the PTS platform. You'd click on, let's say you'd click on strategy number 1. In the drop-down menu, you'll see all these different categories. Click on scan right here. And in a matter of minutes, you'll be able to scan any market you choose from. We give you different markets from the DAX European markets to Asian markets to Bitcoin to futures, currency pairs to the S&P 500. Choose whatever market you want, load the symbols, and simply click scan. In a matter of minutes, you'll see either green or red horizontal bars. The green bars mean there's a buy signal and the corresponding stock. The red ones mean there's a sell signal. That's it, okay? All right, so let's say you had scanned for this past week. And you would have scanned and seen that there was a buy signal in SWKS. This was on the 28th last week in August, all right? Now, using our other feature, all you'd have to do is click on strategy number 1 right up here in the green strategy tab on our platform. And you see we have all these different signal arrows, the indicator, that's the pre-formatted Donchian channels. But I want you to click on extension exits. And right off the bat, these would appear on the platform, giving you different places in which to exit. Once the trade unfolded in 3 days, if you decided to get out at the third one, well, you would have gained nearly 10 points in just 3 days. And then look what happened these last couple of days. We all know that the market has fallen out of bed. Do you think the scanning of this winning trade along with the exit levels could have helped you? This just happened last week, and it's happening over and over again. Now remember, it's very consistent, meaning that there will be some small losses from time to time. That's okay. As long as you use our money management rules and our stop placements and our exit rules, we want to make sure that you become a consistent trader. So this is all included in the platform, along with personalized tech support. So let's break down this great Saturday offer, okay? This is our Saturday morning discount. Normally, if you purchased all these things separately, these two great strategies along with the platform, it would cost you close to $7,300, okay? We're in no way going to have to charge you anywhere near $7,300. In fact, for a limited time only, you can get all of this, all these different bonuses, the two strategies, along with 6 months of our platform for only $297, less than $300. That's it, a one-time payment of $297. That's a nearly $7,000 savings. I mean, think of it. All these things we just went over in detail. Where we taught you the strategy. We showed you all the exit levels, showed you how to scan on the platform. All these things you can pick up as early as today for less than $300, okay? So, as I always state, a year from today, you will have wished you became a member of these courses. Why wait any longer to take your trading to the next level? Become a student of mine in these two courses. Learn how to trade and to make your own decisions based off consistency and things that have stood the test of time. Here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. They help me develop and market all of our different courses as well as the PTS Primo charting platform. You can email them at trading@ProTraderStrategies. I would strongly suggest if you have questions concerning the strategies and the cost or the platform, I would call them directly at area code 310-598-6677. They have qualified trading consultants manning the phones now. They would be happy to answer any question, okay? Now, speaking of questions, I promised I would take your questions. So I'm going to leave this slide up here. If you happen to have a question about what we went over today, please feel free to ask, and I promise I will answer it to the best of my ability. Someone is asking, Steve, I love this strategy, but do I have to use the Donchian channels? I don't have them. Well, I know a number of platforms don't have them. I know a lot of students in the past, and myself included, when I first learned this, I tried to experiment and substitute them with other indicators, such as moving average envelopes, such as Keltner channels. And trust me, over practicing and researching this for about 4 decades, nothing works the same. You will not get the same results as you would with the Donchian channels. So I would really highly suggest that you take advantage of this offer, because you're going to get the platform which has everything pre-formatted. And it's the same thing with Strategy 3A. That comes with a special setting for the Bollinger Bands, and it's already pre-formatted. So I would really not suggest looking at other different indicators, because you're not going to get the same results, and it just won't work as well, in my opinion. Okay. Steve, in your promo, it said something about educational correspondence. What does that mean? Oh, it's a good question. In fact, let me go back there. Along with that, as you see there, it says educational correspondence at the very bottom of the different bullet points. That means you will, once you become a student of mine, you will get my personal email address, and you can contact me whenever you'd like. Students email me over the weekend. That's perfectly fine. I'll answer your email over the weekend. Students email me at all times during the night. We have students in Europe. We have students in Asia. So, we know we're on different time settings. So that's fine. And I will usually get back to you within the same day, sometimes within no more than 24 hours. So that's what we mean by educational correspondence. And, we're right there with you. So I know a lot of students say, gosh, Steve, this is great, but I haven't been trading for that long, or I really don't feel comfortable. Don't worry. Many of our students, I corresponded with a student yesterday that had never even traded before, didn't even know what a stock was. And they were already learning a lot of these concepts and learning them very easily and very well. So we're there with you every step of the way. This is nothing you should be afraid of. This is nothing you should seem to be worried about, because we'll help you learn. And trust me, when I first started, I didn't know what a stock was either. So I had to learn all these things as well. So I know exactly what you may be going through. Okay. So yes, personal correspondence means that you'll be able to get my private email address and reach me whenever you'd like. Someone's asking, Steve, what if I already have the platform? Well, Pro Trader Strategies is very flexible. I'm sure they will be able to work with you, throw in a special offer just for you, because they don't want to make you or charge you and make you pay for something twice. So just contact them. They're very flexible. And as I said earlier, there's no reason to not want to talk to them. There's no obligation. They're not trying to sell you anything. They're there to help you and answer your questions concerning price and any type of tech support. So they would be more than happy to be flexible with you if you already have one of our strategies or not. Okay. Okay, well, if there are no further questions, this will bring us to the end. Remember, I hope you learned something today. I tried to teach you the entry rules to one of our most consistent methods. Please, it is required that you first paper trade that first. Don't just jump in Monday morning and start trading, because inevitably you will lose money, because most students jump in too quickly. You have to learn it like the back of your hand, have some good stop placement, some good exit points. If you want the full range of exits, full range of entries and stop placement, I'm sure you can, take advantage of this great offer, less than $300, and you'll be learning all this as early as today. Okay. Just contact Pro Trader Strategies. I would give them a call at 310-598-6677. As we close and take one last look at our disclaimer, I just want to thank you so much for taking time out of your Saturday. And, I hope you learned something, and I hope you'll be able to apply this. But most especially, I look forward to you becoming a student of mine in the Strategy Number 1 course. Thank you so much for taking time out of this morning. I really wish that you become a student of mine, but most especially have a great and safe weekend. I'll see you next time. Bye-bye.